Hi, I'm Tekoa De Silva with Sprott Global Resource Investments, and I'm sitting down here today once again with Mr. Rick Rule, Chairman of Sprott US Holdings. Rick, as always, good to see you.
Pleasure, Tekoa. Thank you.
So I'd like to ask you today about uranium equities. For our viewer, we are late 2018, going into October, and I understand this is an area that you find to be very attractive at the moment, and so I'd like to ask briefly why, and how would you put the temperature on the market currently?
Well, why is easy. Two reasons. One, I believe past is prologue. And the last uranium bull market that we had was the single most important speculative event of my life. Going into that market, there were, if my memory serves me correctly, 5 uranium juniors worldwide. I'm talking about 1998. The worst of those in the ensuing 6 years ran 22-1. So when you ask me why, the first question is personal greed. I was rewarded tremendously well. The second is that I've come as a speculator to prefer questions where the answer begins with when, not if. And I believe that a question around a turnaround in the uranium market is a question where the answer begins with when, not if. Let me explain. Despite the fact that uranium is out of favor relative to things like wind and solar, things that frankly aren't as efficient. Uranium, even in countries that believe that they're wealthy enough not to have to rely on nuclear power, like the United States, nuclear still provides, if my memory serves me correctly, 15% of US baseload power. Importantly, it's non-carbon generating power. So in an era where there's concern about global warming, where you have a difficult time building new oil or gas or coal-powered plants, uranium is part of the energy future. But importantly, it's part of the energy present, too. Now, on a global basis, the International Energy Agency believes that the fully loaded cost to produce a pound of uranium, that includes cost of capital, is about $60 a pound. So right now, the industry worldwide makes the stuff for about 60 bucks and sells it for 25, loses 35 bucks a pound, and of course tries to make it up on volume. This doesn't work well. If you have a circumstance where you know, which we do, that uranium is part of the energy future, and I don't mean 20 years from now, I mean 5 years from now or 6 years from now, and you know that the industry loses money on every pound of uranium it produces, the question you have to ask yourself is A, will the price of uranium go up? Or B, will the lights go out? And I think if you ask yourself that question, you understand the importance of asking yourself a when question rather than an if question. So the answer to the first part of the question is what attracts me about the uranium business is the inevitability of success and the scope of success that I might enjoy given my experience in the past.
So where would you say we are now in terms of supply, demand?
Unfortunately, you're asking me a question that I can't answer. There is a when question, and I don't know the answer to it. I can't tell you how far down the road we are. The very low uranium prices have done a very important thing. They've begun to wreck supply. Cameco, the most important uranium producer in the world, has shut down 2 very large mines. They'll be very expensive and very time-consuming to reopen. The Kazakhs have deferred capital expenditures, which have reduced their production by about 10%. So we're beginning to see supply destruction in the uranium space, which is important. But there are important above-ground inventories that allow us to use existing mined stocks in preference to new mine supplies. The most important determinant of the uranium price in the near term, and by near term I mean 18 to 24 months, will be the pace of Japanese nuclear restarts. You'll recall that the bear market that we're experiencing in uranium today is primarily a consequence of the Fukushima disaster in Japan, and the fact that the second largest uranium consumer in the world, the Japanese, shut down a reactor fleet of 42 reactors. Importantly, adding their own inventories to supply on a global basis. The pace of Japanese restarts is the most important determinant as to the uranium price in the next 18 to 24 months. In the 5 or 6 year time frame, the problem takes care of itself. As a consequence of the pace of new plant construction, which is at record highs worldwide, the GCC nations, Saudi Arabia, Kuwait, United Arab Emirates, and China are building reactors at an absolutely amazing pace. So if you look 5 and 6 years out, there isn't a problem. For most speculators, 5 or 6 years is an eon, and those people will need to focus themselves on the pace of Japanese restarts.
Mm-hmm. So what's the dynamic, Rick? What happens when you're in a commodity where you're awash in supply? Supply starts destroying itself, and demand, it starts to creep up incrementally. What changes that?
That's a wonderful question, Takoa. What changes as a consequence of it, or what changes it?
What changes as a consequence of it, and then what happens to the companies also that are in there working on that material?
Sure. Supply destruction is more important in terms of resolving bear markets than demand creation. Because if you have the productive capacity to meet the pricing signals from a market that gets out of balance with increased demand, the industry can just increase supply to meet the demand. When you have destroyed productive capacity, it can take as much as 10 years to restart a mine. It commonly takes 20 years to start a new mine, between permitting, financing, construction, all those types of things. So when you balance the supply and demand equation with supply destruction, the upside that you can see in commodity prices is much greater than would otherwise be the case, because the industry doesn't have the opportunity to increase supply relative to demand. And pardon this pun, in the uranium case, the upside is particularly explosive because the price of the commodity is almost irrelevant in terms of the value of the product produced. If you look at the cost of uranium as a component of the price of finished electricity from a nuclear power plant, it commonly runs between 3 and 4% of the finished power price of the uranium that goes into the plant. Now, if you and I have spent $5 billion on a power plant, and we're using 1 million pounds of uranium a year as an example, if the price of that uranium goes from $25 a pound to $50 a pound, in other words, if it doubles, it doesn't matter to us at all, not one whit, relative to the capital that we already have invested in the plant. So I would suggest to you that with regards to uranium, you have a circumstance where the price can go up because it's cheap, and it must go up because the industry is losing money with every pound it produces. Something that can happen and must happen will happen. I just can't tell you when.
Mm-hmm. A speculative question then. How many companies would you guess are still surviving in the uranium equity space, and what kind of market cap response in that segment of the resource space would you expect?
I would suspect that there are 30 companies left in the uranium space. I would suggest that probably less than 10 of them are viable competitors for a place in my portfolio. I'd probably prefer to have 5 or 6 as opposed to 10, but that's just a personal preference. It means I have to work less hard monitoring companies. In terms of predicting the dimension of the response, I'm leery to do that because that involves psychoanalysis more than securities analysis, and I'm not so good at that. I will just reiterate that my experience in the last uranium bull market was the single most pleasant and frankly the single oddest experience of my life. Now, one thing that speculators might note, taking that into account, is that I wasn't the only one who enjoyed that last bull market. And my suspicion is that when the uranium stocks begin to show signs of life, that money will pour into those few remaining uranium juniors as a consequence of speculators' memories. I'm reminded of the first 3 months of 2017, where the uranium price increased from catastrophic to only disastrous levels. And the price of the uranium juniors across the board doubled and tripled. It doesn't take very much by way of signs of life for speculative juices to come into the uranium business in spades as a consequence of the incredible market that we saw in the uranium juniors in the sort of 1999 to 2005 timeframe.
Mm-hmm. Right, Rick, so over the next year, what would you like to do about it? And for the viewer, if they're inclined, what might they consider doing about it?
Well, I think that for speculators who are willing to assign themselves an 18 to 60 month time frame, that beginning to assemble a portfolio of very high quality uranium juniors, ones to begin with that have some pounds, not guys that are merely looking for uranium, but guys that have some uranium, and in particular management teams that have been successful in the uranium business in the past. While a rising tide will float all ships, constructing a portfolio of the lame, the halt, and the blind is not normally an intelligent strategy. So attempting to develop a portfolio of the best is, I think, what you do right now, if you are a patient person. My good friend Steve Sugarrood has said that making money by sector is a consequence of finding something that is hated. Uranium qualifies. That is cheap. Uranium qualifies. And is in an uptrend. Uranium doesn't qualify. So the trend followers might want to wait. I know this is going to sound strange, but they might want to wait for the whole sector to double. In other words, to be in an uptrend. I myself am too cheap for that. When a sector doubles, I'm always mad at myself for missing it. But the truth is that if you believe that the entire sector, or at least the viable part of the sector, can go up tenfold, the fact that you got some confirmation might be better for most speculators. For myself, I'm very, very, very prepared to buy unloved, undervalued circumstances with people that I know and love and trust, and wait.
Mm-hmm. So Rick, what is a technique that you like, a tool that you like adding into your approach to help reduce the risk of maybe being 2 or 3 years too early?
That, I think, is a function of the investor knowing him or herself. We talked in an earlier interview about the fact that you shouldn't buy a share of stock if you wouldn't be willing, in fact, delighted to see it fall 30% in price so that you could buy more later. I wouldn't buy any of the uranium juniors right now if I wasn't prepared to participate in subsequent financings in the next 12 to 18 months to keep them alive until the bull market starts. Remember that the bull market could start at any period in time. Just because I say it's likely to take 18 months doesn't mean it couldn't start 3 months from now. But I would suggest that an investor needs to be disciplined enough in his or her own soul that they are willing to participate in a market knowing that they might have to average down, and knowing that more time than they're comfortable with might pass before they succeed. And in the case of uranium, always knowing that any particular point in time, any particular quarter, could give you a Chernobyl, a 3 Mile Island, or a Fukushima. In other words, if you're going to participate in a sector that could give you 10-fold or 20-fold or 50-fold or even 100-fold upside, you have to be prepared to risk 50 to 100% of your money on any individual name. If you're not prepared to do that, one might look at, say, 10-year U.S. Treasuries.
Well, Rick, this is a broad subject to talk about in just one video, but in winding down, do you think that there's anything we may have missed?
I don't. I would encourage people who are considering participating in the uranium space to visit with individuals who have done it before. This is self-serving, of course, but many of those individuals work for Sprott. To the extent that people who are listening to this video are Sprott clients, they should visit with their Sprott broker, or they should visit with me to understand something about how the history of the uranium business might impact the future of the uranium business, and prepare themselves for what is an exciting but certainly treacherous environment.
Well, Mr. Rick Rule, Chairman of Sprott US Holdings, thanks for sharing your comments with us.
Always a pleasure. Thank you.